Welcome, everyone. It's great to see you. We've got a full schedule for today's program and discussion. Just excited that you're all here because there are many important things that we want to share with you. Some exciting stuff, and especially we have a special guest today, which I'm delighted to be able to share with you. Dr. Thomas Marois, who runs the public banking project up at McMaster University in Hamilton, Ontario, and is probably one of the best-known global experts on public banking. We brought Thomas in to share some thoughts about some of the work, really a relatively new concept that we think is very meaningful and potent for us from a introductory institutional standpoint, namely municipal development bank concept. And we want to talk about our upcoming conference. We're launching a new and a very exciting matching grant campaign as well. And we've had a couple of discussion points that we want to focus on about community banking. We have a public banking bankers committee, and also a strategy that is emerging from that has to do with bridging the gap and demythologizing the world of public banking for our brethren and sistren in the community banking industry. That's what's on the list so far. And we'll also be hearing just a couple of minutes from Don Morgan, the president of the Bank of North Dakota, talking about the community bank relationship with the Public Bank of North Dakota, and surprises, some surprises. But I really want to start with Thomas Marois because Thomas only has a little bit of time for us today, and he is somebody who is on our PBI's advisory committee board and has been in this fight, as it were, really a founder of it for many, many years. Thomas is a professor of political economy in the Department of Political Science at McMaster. And he was formerly over at the SOAS University in London, has written many books, lectures around the world and on this subject. So we really have a master in the house. Thanks, Thomas. If you don't mind my building you up with this. I mean, he's a regular guy, but he's a wonderful resource. Um, so let me begin, Thomas, by saying that what precipitated our contact for this meeting was an article that was printed out of at McMaster about a new banking formula or matrix, and namely the municipal development bank concept. So let's go there. But before maybe we start, just to confuse people, tell us a little bit about the public banking project at McMaster, which you founded, got underway a year ago, but now has a curriculum built out around starting public banks, et cetera. So tell us a little bit about that, Thomas.
Thanks,
There you
Walt. Thanks very much for the warm introduction. And yeah, I mean, you and I and the Public Banking Institute have been in this fight for a while now. The Public Banking Project, which, Boros and the Public Banking Institute sort of nomenclature, it's been around for a few years now, but basically it's an attempt to sort of institutionalize at a more academic and sort of research level within the sort of university sphere, the work that we've all been doing. And it was really the purpose for me coming back to Canada from the UK. McMaster University is 150% behind the work. They really want to amplify it and make McMaster the world leading research center on public banks. And we're well on our way to doing that. And our sort of next step is to really build what we're going to call like a public-public collaboration lab or accelerator to dig into those relationships between public banks and other public entities, so public services like water or transportation, municipalities, but also public purpose entities, First Nations communities in Canada, cooperative banks, credit unions, CDFIs, those sort of aligned institutions to, get the kinds of development projects done, green and just transitions that we know need to be done, but are really held back by private profit seeking, profit maximizing banking and inappropriate finance. So that's the next big project, is to really magnify the public banking project. So that's kind of what we're working on. Do you want me to go on about the
Just one more
paper?
comment about the banking project. It's really an international undertaking, isn't it? And
For
you
sure.
at McMaster University, at the school, you've got a curriculum that you've built out a curriculum to address the needs of the industry. So at some point, I'm wondering, will McMaster be offering training programs for bankers who want to become public bankers, or will it be something in that thread that we might anticipate?
Well, let's hope so. It's a question of resources. So I'm just
Uh,
on the cusp of launching a Public Banks 101 micro-credential course for trade unions and activists. So we're going to pilot that sometime next little while. But that's part of the fundraising and so on that we're doing for the PPC lab, is to get
mhm.
more capacity, more folks working on this so we can build out a curriculum, because I frankly can't do it all myself.
Right.
Because I really am engaged from, right at the grassroots level across Canada and US, San Francisco, New York, you guys, straight up to United Nations, and having an impact there at the global level as well. So it's a busy day.
Is there I know that there's a First Nations initiative out in Alberta that our friend Mark Anielski, our fellow colleague, is working on. Are there other public bank initiatives there? Of course, Canada used to have a public central bank, but
You
uh,
mean in Canada in general, or
yeah,
just
yeah,
among Indigenous peoples?
in Canada.
Well, in Canada, we have quite a number actually, but the top seven, which would include like a public bank, public financial institution that's a housing and mortgage institution, has about 300 billion in assets.
Yeah.
We have the new infrastructure bank that was created in 2017. There's about $1 trillion sitting in public financial institutions in Canada, so we have quite a bit. The one that's in that policy brief on the Municipal Development Bank
Mhm.
is called the Municipal Finance Authority of British Columbia. So in Western Canada, it is a bank owned by cities, for cities, that's held within provincial law or state level law. And it's been around since the 1970s. And it has about over $10 billion in assets right now.
Mhm.
And maybe that's a good segue into talking about that,
Yeah,
because
absolutely.
the policy brief, I put the link there, that we just launched last week or so, calling for a new municipal development bank for Canada, is really modeled or mirrored after this Municipal Finance Authority of British Columbia.
Mhm.
It was created in 1970, uh, as I mentioned, owned by cities, for cities. I argue in that paper, and we have another one coming out on it. It's among the most efficient banks in the world, hands down. It's 20 employees managing 20 billion in assets. That's $500 million per person.
Wow.
Never had a default in over 55 years. It is democratically governed. So municipal councillors from the cities, sit on the board of the bank and give that bank. Hi, Melissa. You're right in front of my screen now. Great to see you. They're the ones, in sort of governing the bank. Um, and it has a deep principle of equity. So one of the major, and so I just started digging into this bank a year or so ago. I didn't know that much about it, but now I'm like, oh my God, this is probably one of my favorite banks in the world now, public banks. But it has a deep sense of equity built into it, insofar as all cities. So a key feature of it is that it has monopoly on lending to cities who are members. So if you become a member of this bank, then you can only borrow from the Municipal Finance Authority, which makes it extremely efficient. But it also means there's a principle of equity. So whether you're a town or a municipality of 5,000 people, or a city of 500,000 or 2 million, everyone gets exactly the same rate of interest. It has a AAA credit rating, so it has a higher credit rating than its province. All of these are extremely unique and incredible achievements for a bank like this, which is based off another very unique, incredible actually right of the bank. It has the right of taxation. So the
Right.
Municipal Finance Authority can levy and does levy annually a small tax on all property owners, both homeowners and commercial properties, of like 0.01%, like a dollar or two a year, just to exercise that authority. But it has this right to levy a tax should there ever be a systemic run on the bank, like all the municipalities start to default in their loans, which has never happened. I mean, it's never been a single one. But it does have this right of taxation, which then enables it to get this AAA credit rating and be able to borrow in international markets at the cheapest possible rates. So it's frankly an incredible model. It's democratic, it's efficient, it's local, it's stable, and it's by cities for cities, and really feeding in. It does a huge amount of work in water, wastewater infrastructure, but it's also green. So it also tracks all of its lending to the SDGs. And to add on to that, it also offers investment services for municipalities. So if they have surplus that they need to park some money for a while, they can invest through the Municipal Finance Authority and then say we want this only to go to sustainable investments, these sorts of things. Again, it's a very trusted partner in that. So just all around, it's a bloody amazing bank.
Yeah.
And so now I'm pitching it for the rest of Canada, and trying to get some momentum up and around that.
Well, it was really a wonderful discovery from our perspective too, because of for a couple of reasons. But as the infrastructure needs that are facing states and municipalities of all sizes in the U.S. Depend on really ill-suited financial resources. As I think your article points out, they're not fit for the job of funding the kind of massive investment that's needed for infrastructure. And because we're stuck with the notion of a public-private partnership where profits get siphoned off, where the limited access of market capital has a vote in how things go. So what you're talking about here is a kind of a public-public partnership, which is an iteration that you've mentioned before. Would you talk about how that works and the distinct advantages between that and what the U.S. cities typically has to work with?
Yeah. So it's basically just a relationship between a public bank and other public entity based on policy versus profit, if you want to boil it down to its simple iteration. So in this case, Municipal Finance Authority has, not only does it not have a profit maximizing mandate, which all private investors would, and they have that fiduciary duty to maximize the returns for their investors or shareholders and so on. But the MFA has put an explicit policy to minimize its profits, the absolute minimum possible, to enable to translate those savings on to the municipalities. So I saw a question there in terms of what kind of rates of interest. So I don't know the exact rate that they're offering to municipalities, but they're borrowing from markets at around 4.5%, which is basically sovereign, like at a sovereign level. There's very little difference between what the MFA and the province is borrowing at. And then they just basically, are lending to cities probably between 4.5% and 5%. And whenever, if they happen to turn a disproportionate profit for some reason, then they return those profits to the cities based on their lending.
Mhm.
So that's a notion of collaboration versus profit maximizing, where they're obviously the private investor is trying to hold as much returns and generate as much returns as possible.
Mhm.
But also just that relationship is not one of competition, and it's not the public bank, in this case Municipal Finance Authority, is really interested in helping the public services and the municipalities reach their goals, and
Mhm.
and lending in a way that supports them versus bending, so PPP in water, for example. Inevitably, if a private investor is lending to municipality in a public-private partnership for water, then they're going to try to jack up rates to ensure that the water is cost plus, that it's bankable, and so on. And so in those PPPs, it bends the logic of essential services to that of the investor
Right.
versus that of the public. And so public-public collaboration is the polar opposite. It's about the mandate, the public mandate to deliver essential services.
So if a U.S. city, and we have several in mind, would want to initiate this sort of thing, they would have to still go after a bank charter, correct?
I mean,
That,
I don't know in the US, like they're not a deposit taking institution, but they would certainly have to be constituted in law and
mhm, mhm,
in public law and set out the terms of that. So um, yeah, I can't speak to that specificity.
mhm.
I don't know if there would be any role for the FDIC in this, since its role is not to take deposits, but simply to borrow in markets and pass those savings directly onto cities.
So their capital is coming from some private sources. I thought it was coming from public sources of taxation and
No, the
appropriation.
taxation backs their credit rating. So that's what gives them a
I see.
AAA credit rating and
I
the
see.
fact they've never defaulted.
Okay. Okay.
But rather than, I mean, it's like any development. So it's a development bank model, and all development banks have that model of borrowing domestically or internationally and passing on those savings.
Mhm, mhm.
So you get around the deposit taking that element there, that challenge.
Yeah. And in the paper, the link that you sent, did you send the précis or did the full paper? I'm just curious
The
in the
link
chat.
is for the full paper. There is a sort of two-pager
Okay.
summary of that, of
Yeah,
the evidence
which
brief.
I can put into the chat later on, because it does a nice job in instilling this. Also in Canada, you have the Alberta Treasury Branch, which is the largest public bank in the Western Hemisphere. Do they do operate on the same sort of a basis?
No, and and so that's like kind of the opposite, where you have a publicly owned bank that is not democratic, has really no links of accountability, and is more of a profit maximizing entity in many ways. I mean, it does some interesting things, but it has had a historic role in providing services like financial outreach and so on. But there have been challenges in that institution because of its lack of accountability and transparency, of it being captured by the oil industry,
Oh, I see.
and you know limiting its capacity to do different things. But there are some interesting things. It does partner with, for example, so I'm from Alberta. I'm also of Indigenous Métis heritage. We have the Métis Nation of Alberta. They have a small like CDFI that is Métis owned and operated, and they're partnering with the Alberta Treasury Branch, for example, to help reach more remote communities and provide
Mhm.
various services in that regard. So lots of potential. I think the ATB is a under-realized public institution, put it that way.
Right, right. Listen, folks, because we've got a limited time with Thomas, I want to open up the floor to any questions you may have for him at this point. So if you have a question, just raise your hand and let us hear from you. These are right now questions for Thomas. Roger, you had your hands up. Is that something you want to talk about, ask about? Roger Meadows in Long Island, if I recall. Right? Go ahead, Roger. Morning.
Yeah, hey, how you doing?
Good.
It, it, I didn't have a question for Thomas though. I had a
Okay.
question in general. So,
Okay. Well, maybe if anybody has any burning questions, Patrick, for him, Roger will come back to you. Okay, bro? All right, thank you. Patrick?
Oh, yeah, I was curious about the notion that the profits, they want to minimize profits and that any excess profits go back to the cities. Now, in a traditional bank, the profits are returned to the bank. A certain amount goes back to the shareholders in the form of dividends, but the profits go back into the capital, which makes the bank able to make larger loans and grow. So I think this seems to me kind of self-limiting. So perhaps there's something I'm not understanding.
No, you've kind of got it. It's like, so a portion of them do go back into the reserve fund.
Mm-hmm.
And the reserve fund is there to bolster its credit rating in a sense that's
Mm-hmm.
also backed by its right of taxation. But that bank is not, it's not limited in the like all development banks. It loans by pulling in, it borrows from financial markets. So
Mm-hmm.
it doesn't use reserves to lend.
Ah, okay. Mm-hmm.
So the reserves are there just to enable them to borrow more should they need it. But they just respond to what the cities need. So there's no, whatever the cities ask them, they deliver.
Mm-hmm.
So
Mm-hmm.
in essence, there's no limit other than the needs of their clients. Does
Mm-hmm.
that make sense?
Yeah. Mm-hmm.
Yeah. So yes, part of the profits are held
Mm-hmm.
in reserves, but
Mm-hmm.
if there's anything beyond that, then they just return it back to their shareholders, which are the cities.
Thanks.
Thank you.
Thank you, Patrick. Appreciate it. Jim?
Yes, I think that really clarifies how and that profits are returned to the cities, because if they are the shareholders, then that's who gets it. I suppose in the accounting is probably as dividends. The question I have for you is, how does Canada compare to the United States in terms of domination? In the United States, I think that all of us in our community pretty much agree that Wall Street banks dominate banking in this country. And we feel that that domination is one that serves the interests of the banks
Yeah.
primarily, and secondarily the public. So in Canada, is this a case too, where you have this overwhelming domination by a few banks across the country?
Yeah, I mean, yes and no. So the US dominates not only US, but then the world. So we don't have that problem. Canada, but we have what's called the Big Five. So there are basically five banks that control 90% of the market across Canada. And they're coast to coast. And those are all the sort of commercial retail deposit taking banks. And yeah, so it's a huge problem. We have many credit unions, and those are also playing an important role. But Canada is unique in that there's basically five players coast to coast that not unique, but is defined by that in many ways.
Thank you.
And so part of my role is thinking rebalancing that, building
Right.
up that.
Lucille in Illinois. Hello.
Hi, yeah, I actually just am giving voice to the question last one I put in the chat. I think if I understood you, you're saying, Thomas, that municipalities and any other public entities that are members of this MFA do not hold their funds in the MFA. It's
Nope.
just that the
It doesn't
MFA,
hold any funds. No.
okay, so the MFA just lends to them at a lower interest rate than they can get from the depository institution where they do their banking or
Yeah.
from funds.
Yeah. So in Canada, so some lending might come directly from the provinces or the states, or they might have like departments within the province that they might lend to the banks, or some cities go directly to the internet, like to the bond markets, and will borrow from them. And so the answer to the question is, they don't go to commercial banks to borrow at all. So it's either bond markets or from other various, public, like it's very fragmented, public like institutions, or they borrow from the provinces,
Or
right?
from this MFA.
Or in the case of the province of British Columbia, they borrow from this municipal finance authority that has sort of centralized this capacity, and is geared towards giving lowest possible interest rates, which is what it does, whether you're a small town or a big city type thing.
And that low was 0.5%? Is that what
No, 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 no. Like so they're borrowing at around 4.5% in markets and lending out at, probably, I don't know, 5%, something like that.
5%? Okay.
Yeah. Which
Okay.
is something you can't really get. Like, for example, a town of 50,000 people could never get that interest rate
Mhm, mhm,
from bond markets.
mhm.
They would never be able to access them.
So it's just working within the existing system to make it a little bit less onerous for the public entities.
Yeah, it's when borrowing is appropriate. So I don't make the argument, I never will make this argument that there shouldn't be greater fiscal transfers from higher levels of government and taxation, those kinds of things. These banks they're not magic money trees, right? Debt still has to be repaid. But they're everywhere in the world, cities borrow for various reasons. And when that's appropriate, then it is useful to do that through a public institution that has your back and is not trying to maximize returns.
So it's not a bank per se. It's not a chartered entity. It's simply
It's not a commercial bank or retail bank. It is
it's
a
an
development bank. It is a
amalgamation.
bank. There's hundreds of them around the world. It's a bank.
Okay. Okay.
Trust me.
An investment bank.
Well, I just want to be clear about the architecture here, because we talk about having our own chartered banks, generating new lines of credit, new realities, new expansion of the
Yeah,
economy.
so it's not a money creating bank. So it doesn't
Okay.
do that money creation.
Right.
Yeah.
Okay. Very good. Joseph in Texas. Joseph, welcome. Joseph is in an interesting. I don't know if you have a camera there we could see you, Joseph, but I'll give it to you in a moment. Joseph was in touch with us because he is a member of a board of a municipal utility development cohort, which of course needs funds municipal services. Joseph, I'll let you take it from there. I'm looking forward to.
Thank you very much, Walt, and thank you, Dr. Marois, for the time that you are dedicating to us. I appreciate the information in the paper. Yeah, let me, by way of introduction, just 30 seconds, give you the context. So they're called municipal utility districts, and I'm in a group of 10 of them. They're creatures of the state, legal entities that have the power of general debt obligation. And think about infrastructure projects as small as drains and as large as dams, and the power to also create roads and so on and so forth. So think about big infrastructure. And the question that I had, I did type it out in the chat. If my verbal version of it doesn't come out clearly, you can just reference the chat. But basically, I was wondering, Dr. Marois, if you had drawn or were familiar with Dr. Richard Warner's empirical studies regarding the creation of credit ex nihilo, and then the stunning example of the miracle of Virgil, which was an Austrian town in the 1930s that during the Depression basically ran out of units of currency, and they were able to use the idea of creation of credit ex nihilo. And so the question is, have you considered moving beyond the current market-based borrowing? I heard the last answer that the current instantiation of it does not involve the creation of the units of currency. So I was wondering if you would be considering in the future or have considered using that instrument. Thank you.
Yeah, thanks for your question. It's a big question, and yeah, I know Richard. I've been working in and around this field for a long time now, and I'm. It's not like an against or a for in a sense. Like there's a role for the deposit taking banks that can then create their own currencies, their own money, and so on, magnify money, and I support those efforts. As do I support, a long-standing model of development bank that's where it, borrows. It can borrow from pension funds, it can borrow from other public entities, and borrow whatever, and passes those on. And the question really is one of strategy and precedent and appropriateness for a given community. And should a community see greater potential in creating a public institution, a pro-public one on the development banking side that can support municipalities in ways that are appropriate for them, great. If that community sees space and the strategic possibility of creating an institution that is deposit taking and can magnify money and will then also support that community, and that's a viable strategy, great. It's not an either or. And I think there has to be a lot just depends on that. And I started off my work more on the deposit taking side. I still do it, but there are real challenges on that side too. And I could give you a gajillion examples. Everywhere from Alberta, where I'm from, to Turkey, to Brazil, to everywhere around the world. But I would just, say it's not an either or. We don't have to, it's not a battle we have to settle once and for all. A lot just depends on the strategic context in which you're functioning.
Thanks, Thomas. Yeah, I mean, I think that essentially the MFA is also that's the acronym for Municipal Finance Authority that Carl Beitel initiated back in 2015, which was a precursor for the iteration of a genuine depository public bank. It's still what's on the table in California, and I think in Philadelphia and elsewhere. So when we look at moving it toward publicly owned financial institutions, that is one iteration that obviously can work and does work. And I'm glad to hear about it this morning in those details from you.
And they often work in collaboration with each other. So you can have the deposit taking institutions working in collaboration quite well with the development banks.
Very good. Okay, Didicus, who are we?
Yeah, just very briefly, I may have missed it, Dr. Marois. In the structure of the bank, how is your board constituted, and are they elected or appointed, and what do they represent?
They represent cities, so they're city councilors, and I think they're appointed by their city council, and then that creates a 40-member, I forget the exact name, it's in the paper, like larger governing board, of which then they elect, if I'm not incorrect, a 10-member sort of management board type thing, constituted by the councilors, who then within that 10 elect the chair of that council.
Okay, are they only elected officials, or are they civilians as well? Like,
to my knowledge, it's only city councilors. It only city councilors, but it's part of a regional authority, sort of as the gentleman was talking there. It's sort of municipal, like sort of regional. So it's not just cities, but they're regional authorities. So there could be the possibility that they might send somebody from the regional hospital district, for example, a public employee. But I don't have an absolute answer for that of certainty. From my knowledge, it's only city councilors, so elected city councilors, who would then be appointed to the board and then elect the more management 10-person board.
Great, thank you.
Thanks, Didicus, and Ellen will let you take us out here since Thomas has got a deadline here. So great.
Okay, just a quick question. You said that cities couldn't borrow at 5% normally. So what is the normal interest rate for a city, like a bond issue, I guess, by a city?
It would depend on the city. So like the biggest cities like Vancouver or Toronto might get 5% or something like that. Smaller ones are looking more at like 8%. And yeah, they're actually in the paper. I think I reproduced an example of the cost savings of bond issuance versus lending from the MFA, based on a AAA rated city versus borrowing directly from the MFA. And there is significant, so that's the MFA data. So I didn't run my own numbers, but that's assuming a AAA city, comparing bond versus city, and still significant savings borrowing through the MFA. That would be magnified significantly by just, a small town or, a small city, which would never get that rating.
Okay, and thanks for your presentation. It's great seeing you.
Pleasure. Yeah.
Yeah. All right. Unless anybody else has any burning questions for Thomas, I will say thank you, as always, Thomas, for the short notice and for being here. And I know that we can call on you between now and the next time. So thanks very much.
Thanks for the time.
All right.
Bye-bye.
All right. Thank you. Um, it's wonderful to see how these iterations, and as Thomas would tell you, there are no perfect public bank models. They're all different, all dependent upon all types of different economies. So we don't work inside of a box. We really work inside of a warehouse of boxes, of possibilities about how we put the needs that we've got and the resources that we've got, and we package them for useful purpose with the insightful wisdom that this is our money and that we can do with it what we want instead of having private managers manage our money for us. So these iterations are very exciting, and I think that I'm really grateful for that. Now, speaking of, because community banks are front and center with us at all times, because as we've said, they're really critical for public banking to move forward. We want to point out some of the a recent article that we did that Earl Stalin and Ellen did for PBI in response to a Cranes business article about pushing back against public banking. I don't know if you guys have seen that or not. But it's something that I'd like Ellen and Earl just to tell us briefly about, and then I'm going to play something here from Don Morgan. So, Ellen or Earl, would you just review your process there of looking at the objections that community bankers and credit unions in Illinois posed in Crane's Chicago business? Ellen, you want to do that, or Earl?
I'll
Go ahead.
let Earl go first because he was the lead writer on it.
Okay.
Okay, yeah, if I could share my screen, I've separated the arguments of the article in Chicago Business Journal, Crane's Chicago Business Journal that
Yeah.
we responded to.
Go
And
ahead,
we'll
Earl.
take those points up one by one, each of which we
Yeah.
addressed and basically refuted.
You should
Okay, so
have
go
no
ahead.
problem sharing, Earl. Let me know if you have an issue.
All right.
Any problem.
Do I click on share?
Yes, down, well, yes, off.
When
Yeah.
you move your
yeah.
cursor, there should be a menu that pops up. Or-
Okay, I think I got it. Yeah.
Okay.
All right. Can people see this?
Yes.
All right. On February 4th, in the Chicago Business Journal, this article appeared that we responded to. That article was a reply to an article that made a strong and lengthy argument in favor of public banks in Illinois. And the response that we responded to was actually written by 8 CEOs of 8 credit unions in Illinois. And what is rather surprising about it is not credit unions, excuse me.
Community banks.
Community
Advise.
Community
Development.
Development Financial Institutions, CDFIs. And these are not necessarily banks. They can be banks, as I understand it, and they get approved by the U.S. Treasury, and they're able to fund needs at low cost that are often neglected, including redlining, among others. And so it's a very valuable service and very valuable program. So here's how their article goes. I have separated their arguments into piece by piece instead of entire paragraphs. But at the beginning, they make a very good statement. They say the idea is appealing of public banks. If Chicago operated its own public bank, With taxpayer funds it already holds as deposits, it might unlock a steady source of affordable capital to support neighborhood investments private banks often overlook. Well, I put our response basically in caps, all caps here. And the answer is, yeah, correct. And a public bank will do much more as well. Then they say, as CEOs of leading Illinois community development financial institutions, we strongly support efforts by state and local governments to serve unbanked and underinvested communities. Very good, is our response, but you can also do that through public banks, and you can do much more. Then they say a more effective approach would be to enhance partnerships with CDFIs that have a track record of serving these communities. Our response is that's a basic thing we say we're going to do, and we will do. And that was the flaw in the article. They just had a basic misunderstanding about what a public bank can, should, and would do. And we've always stated that. It's in our statement of purpose. Our mission is not only to do partnership loans with community banks and credit unions, but also CDFIs. Then they say, let's go down here a little bit. First, launching a new bank is expensive, complex, and time-consuming. And our response basically is launching a public bank is a lot easier than launching a private bank. First, we have available deposits already from government, which these CEOs mentioned up above. Also, the ability to finance government itself directly through bonds and loans. And that could be done right at the very outset of the bank. So you have immediate income and immediate profitability. And a government has ways to get capital that are quite effective, bonds, revenue bonds, as Scott Baker has often suggested, and others of us strongly agree, using a portion of pension funds that are poorly invested in things like hedge funds and private equity and real estate, pumping up bubbles, basically. And those aren't that profitable. Then they also say any new bank, public or private, must undergo a rigorous chartering process. Our answer is that that's not correct. The public bank is launched simply by passing its statute. The Bank of North Dakota is not regulated by the state banking board in North Dakota. It's self-regulated. Now, whether that could be done by the city of Chicago might be another matter. It might require some state legislation, and it may be possible through home rule that a bank for the city of Chicago, provided it limits its loans to the city of Chicago.
Also, some important verbiage.
Sorry.
Okay. And everybody knows that it takes about 3 years for a new private bank to get started. They have to scrounge around to get deposits, which a public bank does not have to do because it has ready-made deposits already of its own government. And they have to scrounge around to get borrowers. And the public bank has a very ready-made borrower that has infrastructure needs that are constant, that it can take advantage of right away by refinancing its bonds or certificates of participation, whatever form they take, and have an immediate source of income, even from the very first month. Then they say any new bank must meet strict standards for safety and soundness. Well, we agree with that, but a public bank actually meets these more easily in addition, a public bank is chartered and assigned to only make productive loans that serve the community. Private banks are allowed, there's no restrictions, or there are very limited restrictions on investing in existing real estate, stocks, and consumer loans. And so those loans don't naturally create the income to pay them back. So the safety and soundness are much more sure and solid with a public bank than they are with a public bank than they are with a new private bank. And then they say any new bank must submit to ongoing regulatory supervision. We kind of covered that, but it should be and could be self-regulated. Just like the Bank of North Dakota is completely self-regulated, not by the state banking board. They say, again, establishing a public bank would require years of effort before a single loan could be made. Well, we've already covered that, but it's ridiculous to think that, all these CDFIs have this completely wrong impression about how a public bank could be funded, how it could get started. And it tells us we have a real job of educating to do in the banking community, and that includes community banks and credit unions as well as CDFIs. And I know Angela has experienced that in New Mexico. Despite having a lot of legislators on their side and public officials, they still find they have a job to do educating the local financial institutions. Fortunately, Don Morgan has played a very significant role by stepping up and being willing to appear and testify, whether by Zoom, and he's going to go down to New Mexico in person. But that's a way we can really step in and make sure these local bankers and other financial institutions like CDFIs understand how superior a public bank would be for them and for the financial community.
So Earl, I need to step in here because the clock is ticking away. You've done a really good job in covering that article. And I actually want to expand your point and go to 2 minutes of Don Morgan talking about community bankers. And then when Don is done, just to inform you guys about what PBI is doing in that thread, which we'd like you all to be conscious of and participate in. Earl, I hope that's a suitable place for us to step off with you. I know you can go on.
Yeah, sure.
Yeah.
I think they repeat themselves a bit, but basically, the bank provides much more money for all the things they talk about.
Yeah, that's very good. And if you would stop sharing your screen, that'll allow me to move forward here. Thanks very much, Earl. And again, in the chat is his response, and Ellen's response. Here is what Don Morgan, the president of BND, said in Santa Fe back in January on this very thing.
In our founding documents, which is really, really critical to our 106-year success, is the fact, and I typically don't read a slide, but I'm going to read this because this language is really, really powerful. Bank of North Dakota will need the support and cooperation of all the people, as well as of all the banks and other financial institutions. That's key language right there, of all the banks and financial institutions of the state. On its part, Bank of North Dakota does not propose to enter into competition, and we do not, that's right in our founding docs, with existing banks or to supplant any part of the existing financial system. Very, very critical. But to cooperate with, assist in, and to coordinate all parts of the financial service of the state so as best to meet the needs of the people in North Dakota. We live that today. And not only because it's in our founding documents, But the structure of who we are would not work without our 91 financial institutions in the state of North Dakota. As I go forward here, you're going to see we don't really get anything done without the partnership with them, with our banks and our credit unions. And I'm speaking about our community banks and our community credit unions. That's who our partners are.
That couldn't be clearer. And I think that with that reality in mind about how about how the Bank of North Dakota works, essentially tied, really integrated into the local financial infrastructure, we start to understand a little bit better about what our work is about here at the Public Banking Institute, and all of us who are advocating for this, is that we're looking at morphing and evolving the existing financial framework and infrastructure for community lending by letting it grow some new capabilities and new relationships that are not driven by profit, but are driven by public interest and public governance and support. To that end, and for the sake of that discussion, have begun, in fact, we're going to have in about a week and a half, a salon, a discussion of public banking, about public banks and the community bank relationship. And this conversation will be by bankers who are public banking supporters, and really to begin to look at what kind of languaging and framework can we proceed with to help to really substantively change our relationship with community bankers and credit unions who have to this point been consistent blockages in the progress of adoption of public banks. So that's going to be on Tuesday the 24th. It's an invitational, but if you have a relationship with a banker who is also a public banking banker, if you know what I mean, somebody who's into what we're doing, please let me know. We'd like to have them in the conversation. And Ellen, please.
I thought that was really interesting what he said, that we can't really do anything without them. The public Bank of North Dakota has been characterized as a mini Fed for the state. So it's really a mini Fed for their local banks. So together, the Bank of North Dakota is able to leverage their money, increase the reach. They help with regulation. They help with, Michael discovered that there were 71 banks were lost in Illinois since 2000 and 0 in North Dakota. Plus, North Dakota has 6 times as many local banks per capita as the average, I guess, of other states. And there was some other point I was going to make, but anyway, okay, that's all.
Oh, well, thank you, Ellen. I wanted to mention that.
And the Bankers Association endorses the Bank of North Dakota. They don't, they don't see it as a competitor. They see it as a partner. So it's a partnership model, not a competition model. Yeah.
Yeah, 91 banks. He said we couldn't do our business without them. It's very, very cool. That clip from Don Morgan there are other clips from his presentation that are available through, if you go to AFLEP, the Alliance for Local Economic Prosperity, which is anchored by our partner Angela Merkert, who I don't know if Angela is still here. No, in fact, I think she's probably not here. But go to aflep.org, and also PBI has got those resources. Kimberly, I suspect, will find a way to get it into the chat for you to look at. It's really excellent presentation and backgrounding. Jim Hanley.
Thank you, Walt. I have a question and then some observations. First, I'd like to know if Crane's Business Journal published Ellen and Earl's response.
Yes, they did.
They did. That's good to hear. And I don't know if it's conspiratorial to suggest that while these, CDFIs, and I found out that in Tucson, you don't have to be very big to be a CDFI. You just have to do this paperwork, right? That you're going to do this and that.
That's right. Yeah.
Arizona would have to create community banks to support a public bank if we put one here. We just don't have any. The Wall Street banks have driven all of the community banks out of business.
Right.
And on this point of regulation, quite some time ago, maybe as long as 30 years ago, the Arizona Financial Institution Authority, or if it's the Banking Commission, whatever it is, they agreed with the Wall Street banks to stop regulating them. They don't regulate in Arizona. The state does not regulate Wall Street banks. They just they have this privilege and this this status where they're unquestioned in their practices, and so that that argument and that's the CDFIs that falls apart too. I have one more question if I could really quickly.
Sure.
I'm looking at in Tucson, we have this particularly unique situation where we have a city inside of a city, with the city of South Tucson, which completely is surrounded by the city of Tucson. And they're doing some quite novel things, such as buying motels to convert them into transitional housing for the unhoused and that kind of thing. And I was really appreciative to hear say that we have very, very many different models for public banking. For instance, the National Infrastructure Bank model is one that is capitalized with private capital, U.S. Treasury bond holders. It's a little different than a state bank, which is most of the time capitalized with public assets, correct?
Right.
And so I'm wondering, I don't even know if there is a bank in South Tucson. I don't know if there's a single credit union, but it's a very poor community. They lack enterprise, and I don't know what their taxing authority is, if they levy sales taxes or maybe they share sales taxes with the larger city. But I'm considering approaching them to say, well, you really need enterprise. You're lacking enterprise in this city. And so how can you get started, such as creating cooperative businesses in the city? And I think they could do it much more easily if they had a public bank. And of course, that would be a very, very small entity unless we were able to sell Pima County and the city on creating a municipal public bank that all of these government entities could enjoy.
Yeah.
Just a quick note, if I might.
Please.
Yeah, James, a link to the Earl and Ellen article is in the chat. So,
thank you.
But and Jim, I really like where you're coming from about the idea of you see a need, you see South Phoenix or Tucson, right? That has clearly an economic base that is unserved and has assets. And so the process of introducing a public bank in that setting really is about understanding what the economy is, what are the resources, and then of course the disposition of the management, and say, look, in fact, I came across a group last night that does appraisals of urban assets, which I think is a brilliant way for us to begin to understand the value and the capital essence, the holding, the equity that people have in their towns. Land, buildings, et cetera, are all quantifiable. But until we quantify them, until we put them into a mix of understanding, and then we can plan. And to know that a bank as a utility could facilitate moving some juice around and create the sinews of a viable economy. That I think is part of what the public banking initiatives hold. So thank you very much.
Thank you, Will.
Thank you, Jim. I want to go to Roger because he's been so patient right from the start. So Roger, if you're still there, brother, you had your question.
Hey, no problem. I was writing the email anyway. It's all good. I don't know if I asked you this before, but I forgot the answer. So we went from Bretton Woods to petrodollar. Um, and seeing what's happening with BRICS and all that stuff, and Iran and all that different type of stuff, people are going to eventually get off the petrodollar. Larry Sharp, who's a libertarian, who's running for governor in New York State, he has a show called The Sharp Way. One of his viewers had suggested, what about if we transition to an infrastructure dollar, tie the value of our currency to infrastructure?
Right.
And I was just like, let's go further and be public infrastructure, because I don't want to, and it be tied to the quality, not the quantity. Because you start doing quantity, you start eminent domaining all over the place, and and encroaching on wildlife habitats, and taking over people's property. That's a long history with the Black community and the interstate highway system that completely destroyed independent economic Black communities all across the country.
Right.
But what do you think about that idea? Transition to an infrastructure dollar tied to public infrastructure based on quality.
Well, that's a big question, and frankly, it's got great promise. I think Ellen probably has some comment on that. Steve Walsh from AMI may have the monetary reform folks may also have some thoughts about that. But anybody want to field that at the moment? Ellen, Stephen? No? Just a thought. How does that sound? How does that?
I was listening to something else. I'm sorry. I would
Oh,
like to
that's
hear
okay.
the question again. But
Was it-
in regards to the article, I went into Cranes,
Yeah.
and they're playing around with us to subscribe and everything.
I see. Okay.
And I'm wondering if I would like to see it. They only gave 2 sentences that I could read, and I know it says
Okay.
read more, and I'm
Yeah.
Ellen has
Jimmy had
something.
just sent the PDF so that you don't have to subscribe, but it's actually free to subscribe. So
I working on that, but okay. And
So,
but the PDF is in the chat.
okay. Thank
Okay.
you.
Go ahead, Ellen.
So I'm backing the dollar by infrastructure. I mean, the regular dollar isn't really backed by, it's not really backed by oil. That was just I mean, there's no way we can attach it to infrastructure in third world countries the way we did to oil in the, when Kissinger and Nixon went over and made that deal. So it seems to me, I mean, Stephen, that was the question, like that petrodollar is probably going to collapse and we need a new dollar, and what should it be backed by? And Roger said by infrastructure, particularly public infrastructure. I mean, I totally agree that it should be backed by real goods and services, and public infrastructure is the biggest place we're going to get that sort of thing. But what's your thought? I mean, I think the new dollar, I would go for real bills, which is what in the 19th century. I mean, in other words, that's what banking actually is real bills. Like you're monetizing your future promise to repay, and you're putting up something productive or some real stuff to back your future promise to pay. I mean, typically, if it's a business, you're backing it with your future products that you're going to create, which I think, that's what Benjamin Franklin said, that if people just had a little money to, a little credit to get started, they could make some stuff. I mean, I don't remember the exact words, but anyway, he talked about that. So anyway, that was the issue. I don't know what with AMI, what's your thought of what a new currency would be backed by?
Well, first I would like to say I really agree with your real bills, and the Fed was originally set up to be real bills oriented, and actually it was productively oriented in that way until 1935 with the Banking Reform Act of that year. Back to today is that what I'm seeing is that there's different ways I'm a little worried about having another recession like of 07, 08. I look at things as in many ways of with moral hazard, we have already a failed banking system, and that it's a failed in a number of different ways. And there's several different ways for the banking system to collapse. It could be government default. It could be hyperinflation. There's one more, and how it's going to look, we don't know. And you just read the tea leaves and how the Fed's operating. Is it going to just pump more money out there and whatnot? So how are you going to create a new dollar? And it's basically based on your production, as Ellen is alluding to right now. And that's the healthy way to do it, rather than these financial markets, secondary markets. I don't even think they should exist, basically.
Yeah.
And what are we going to do with the $2 quadrillion derivatives bubble that's going to collapse when the big banks collapse this time?
Yeah,
They're going to eat everything.
Yeah, so Roger's bringing up a big can of worms. It's a great question, but it's more to be thought about it.
Yeah.
Maybe now.
Yeah, thank you for that. And before we go to Earl, I want to just make a couple of really important announcements before somebody will have to drop off. But I just want to say two things. One is that we have an exciting challenge grant that has come to PBI, a $25,000 challenge grant, which we'll be launching online during the course of this coming week, and we'll notify you when that's available, when that's live, so you can participate. But basically, it's a dollar for dollar sort of a match. And as you well know from our previous comments, the PBI operates in an enormously lean wallet. So this is a real boost for us to get to a new level of functionality and development, which we're strongly focused on. So we're off to a really nice start for what is going to be a very exciting year for public banking on a lot of levels. The second announcement is about our national conference. As you know, we've been talking around about this for a while. We now have a tentative date of the third week in October, 21 through 25, 21 through 25, probably in Philadelphia, and it will be both in person and online. So it will be a big tent. The focus and the inclusions of what that will be is in the works. Anybody who wants to participate in that committee work, please be in touch with Kibria at office at publicbankinginstitute.org, and then we can incorporate your help, your goodwill, your talent, and your resources for that. So thank you for letting me throw those things in.
I had two more things real quick.
Okay, go ahead, Roger.
Ellen, has Danny Hyphon reached out to you for an interview?
No.
Okay.
You can do that in the chat.
Oh, I'm sorry.
That's
My
okay.
bad. Also, the guy that was talking about from Arizona.
Jim Hanley.
Oh, yeah. Okay. So yeah, Jim, what's up? Yeah, you can run a ballot measure. If you can't get it popping with whatever, because you got 18 months, an 18-month window to run a citizen-initiated constitutional amendment for a ballot measure for Arizona Public Bank.
Roger, it's an enormous lift. It's like 325,000 signatures. The legislature has greatly expanded the requirements for signatures for a public initiative. I think
I understand.
It's just too daunting.
But I think it could still be done. But because other people get theirs on the ballot every year, so figure out how they do it, I guess.
With money.
With money, yeah.
California, we're running a ballot measure. It's costing us about $100,000. So these are not cheap, and and that's just for one city. So imagine California doing that statewide. You're talking $20-30 million to do it statewide, and that's what they've all cost so far.
That's why I say public financing of ballot measures, just like how you have public financing of elections. Have the same thing for ballot measures.
I'm right with you.
Thanks, Roger. Earl?
Yeah, responding to Jim Hanley, and golly, that's kind of shocking to hear that you don't have local banks there. On the issue of regulation of the national banks, the big banks, in general, the states don't regulate those because national banks are regulated by the comptroller of the currency, by the National Banking Act, and that's under the Treasury Department. But they still have to comply with local consumer protection laws and lending laws, I guess, pertaining to interest. But that's not a serious issue. But if you could get a public bank, you could still, even without having local banks there, you could still fund student loans, and you could still directly fund the government, make loans to the government or refinance or finance bonds. And the fact you had a bank there might encourage the formation of local banks and credit unions. Because like the Bank of North Dakota, that bank does work with both community banks and credit unions. I'm sorry to hear you got that problem, but there may be ways around that.
The FDIC reports only report on, they don't include credit unions. And I know there are a lot of credit unions in Arizona, and so I'm sure that these could act as loan providers, like for state, individual economic development, like the Bank of North Dakota has, lending programs for, aspiring entrepreneurs and farmers, those kinds of loans. I don't know if there's, but if there's enough credit unions right now to do that lifting. But I agree with you. I think that community banks would emerge if there is this need. And of course, Wall Street banks are not gonna want to participate. They claim they do all kinds of lending in the state. And in fact, I think that's where there's a shortcoming in regulation at the state level. I don't think the state looks at the lending that they're doing. I don't think the state looks and says, oh yeah, you're doing an awful lot of economic development lending. Because if you look at the FDIC reports, almost all of their assets, well, I would say 2/3 of their assets is in commercial real estate. It's not, they don't lend to businesses in the state.
Yeah, it's a big problem nationally that the local economy doesn't get served by the local banks or by local banks. And so it's a missing piece of key public infrastructure. The utility of banking has been devoured by profit taking. The community banks, of course, and credit unions are starting to buy community banks. And if you recall, it doesn't matter to the Bank of North Dakota. They deal with both as key partners. So they're working with credit unions as well as community banks, as should we. One of the things about the credit union structure is that you have already a popular familial, semi-familial sort of a base for growth. And so the conversation for possibility is expanded there because you have people, neighbors on the board of directors at a credit union. So that's, I think, another area of relationship that we should keep in mind as we look at strategies, local strategies for creating our own public banks. Michael, please. Oh, by the way, to Reshan and to all of you, Reshan in his chat said that wanted to evaluate and compare banking institutions and their architecture. I really want, and perhaps Kimberly can do this for us, put a link to the Public Banking Institute website on which we have this really beautiful taxonomy of financial institutions, how they compare in terms of their service and what they're allowed to do, et cetera, et cetera. So if you go to the Public Banking Institute, learn more, you'll see that chart. And I think I'll leave it to Kimberly to share that from our website. Yeah. Thanks. Michael?
Yeah, I just wanted to give everyone a heads up. This year is probably going to be a very significant year for public banks. There are the war in Iran is pushing up the price of oil substantially, and it's many of the derivatives that are wrapped around the price of oil have triggers that sell triggers that are supposed to kick in when when the price of oil hits about $150 per barrel. And this is what I've been trying to glean from the news media lately. When that happens, they're going to sell, and that is going to bring down the American economy. It's going to be devastating, and in so many ways. But the good news is that we should be prepared to push very hard at every level of government for public banks and saying this is our way to get through this mess and we should be ready to push forward with our public bank agenda and really press hard when that happens. And it's likely to happen this year. So be prepared, my friends.
Thanks, Michael. You make a really critical point. And Stephen, was that a question or was that?
No, I just wanted to add on to Michael.
Please.
I'm sort of looking at the big picture of what's going on nationally. I agree. And one of the words I got from Zarlenga, who was totally in the markets his whole life as professional business before he got into monetary reform, was that you really couldn't predict. So saying it's this year, maybe, could be, it's hard to do that. But I wouldn't be surprised though either. So, but the big word there is when the next financial crisis is staring down the barrel of Congress, then they're going to turn it over to the administrators, the Fed, and they're going to we're going to miss our opportunities. So as Michael's saying, we got to be ready ahead of time. We got to have our congressmen there. We've got to be pushing things. We've got to be working at all levels of which you're doing extremely well. I'm so proud of you all too for so much work you're doing. So good luck, and Michael's words are good for us to heed and should all be giving us a little more kick in the butt, but in the nicest way.
Thanks, Stephen. By the way, folks, if you don't know, Stephen is the director of the American Monetary Institute, one of our collaborative partners in the world of saving money for the benefit of human beings instead of profiteers and the privateers, if you will. So thanks for your participation and for being here, Stephen. It's great to have your input. Nelson.
I keep repeating myself about being proactive instead of reactive. I think that this is we're at a point right now where we need to be proactive.
Yep.
In some ways, being radical, meaning going to the core of the issue.
Mm-hmm.
I have mentioned several times during these meetings that one of the things that the Public Banking Institute ought to be doing is having a meeting with the FDIC folks face to face, and really making the case for why FDIC insurance does not apply to a public bank. This is the kind of initiative that I think the Public Banking Institute ought to be taking. You guys have all the firepower. You have all the intellectual heavy hitters among you. And if you're able to have a meeting, and you should, even if it takes a year to lay it out, you really need to have that meeting. We cannot continue to just react to what's in front of us. We need to be proactive. We need to be strategic. We're being tactical. We're not being strategic. You know, tactics win battles, but strategy wins wars. Okay. And so we need to be mindful that if we don't take the fight to the people that are making these decisions, what Michael just talked about and what Stephen just talked about, we're going to lose an incredible opportunity because these are the guys that are going to be watching for like, well, what's available? You know, that now that the whole banking system is in collapsing, what's available? What's out there? And we need to be at the table. We don't need to be called by them or discovered by them. We need to be in front of them so they know that this is available, that this can be done. One option could be sort of like, okay, fine, try this on a try a do this as a project with one city or one entity, test it out. You know, if that's what it takes. In other words, that's becomes part of the conversation, part of the conversation with these folks. But the main idea that I'm trying to propose is that we need to be proactive. We need to really meet with these people. You guys have the heavy power. I'm not a school guy. I don't have the credentials. You guys have all the credentials among yourselves. You're wasting it if you don't put that forward and meet with these people.
Well, thanks, Nelson. I think that you and I should talk. I should bring you up to speed onto what our strategic plan is and how this has worked, and also how we have been involved and how groups like in California, for example, have met with the FDIC on some of these issues. So some of these things are absolutely in our view, and I think that the strategy for developing public banks is essentially comes down to a local initiative, because as we were saying before, all local economies are different, all resources are different, and so it all comes down to exactly what you're pointing out, is that the people have got to get downtown and talk to the people who are running the show. I'm not so sure the FDIC people there are going to want to talk much about any of this, but I don't.
But you don't know. You don't know that.
But and I think we'd also have to ask the question: would it matter? Because
Absolutely, it would matter.
Yeah, but I mean, Nelson, I mean, this is all. I think your points are really well taken. Believe me, you're spot on. I love your enthusiasm, and I think you're right on it. But let's you and me talk so we can get up to speed, because you've got a game going on in Orlando. Everybody on this call who's working in the field has got game. And we're all playing by the rules that we see.
But Walt, let me remind you that it was this FDIC question that stifled our project here in Orlando, Florida.
Okay.
That was a key question. The FDIC thing loomed over the whole thing, and that's why it was not put in front of the voters.
Yeah. Great. Yes. In which, I get it, man. Listen, I get it, Nelson. Thank you very much.
Okay.
Yeah.
Thank you.
Sure. Ellen, do you want to pick it up before?
Yeah, can I respond to that?
Sure.
So Nelson, it was rejected because the FDIC would not give the public bank insurance. Was that?
No, because in Florida, any money that the government deposits in any bank has to be FDIC approved. So in other words,
so that's the state. No, that's not. That's it. You have to go to the state about that, right? Not to the FDIC. I mean, we haven't been rejected yet by the FDIC. So if we tried to argue with them, I mean, they'd say, well, we haven't looked at that case yet. It's like the Supreme Court, they won't talk about it until it's right in front of them.
So how about just doing some like a research meeting with them? Just research what.
No, but it's the state. It's the state you need to convince. The state, whoever wrote that into the bill, and we in California have a similar bill, and I think Didicus was saying the problem is not the FDIC insurance, it's the fact that it's the regulation. Didicus, do you want to?
That's absolutely right. The insurance is meaningless and not usable. It's only 250,000 anyway, and we're talking about 40 million. But the problem is that the government put it in there, and it's a poison pill that the FDIC has to regulate us, not insure us, but regulate us. And that's and the FDIC doesn't talk to you until you submit your application. Then they go through it and they answer questions on the application. They don't talk to you about theoreticals or hypotheticals, only what's on the application. So they're not fun to deal with. You can't get them on the phone, and you can't really ask them questions and expect an answer, but you can with the state of California, and you can find out why was that put in there? How can we get rid of it? And right now we're making some headway on that, but it's slow. It's very slow. And we just keep on hammering till we get where we want to get to.
Yeah, thanks, Didicus. That's good to understand.
And Nelson, once again, thank you, because that fervor and focus is fundamental for following through on our intention. We're carrying this to the bulwarks here. Marco, in Washington, I'd like to just tap into you for just a moment here about an approved provision in the state about a $400,000 investment in a study. Is that do I understand that right?
So later today, it looks like this Washington legislature is going to pass is one of its appropriations, and we did have a budget proviso added to that, which is going to give $400,000 for a work group that's going to establish creating a public bank here in Washington State. So we're hoping to have that work group. Everything goes fine, which we no reason to suspect it would. That will be passed, and then we will have some money with state agencies and some state legislators, and hopefully some community people be involved too, to be part of a work group to hammer out some of the issues and then have a bill introduced the next legislative session.
Thank you for that update. And I just want to say we would be happy to consult a little bit on that process, because we've been around the barn a couple of times on the study committees. And as you know, the state of Washington has already turned down an initial study a couple of years ago because the treasurer was a Wall Street guy. Anyway.
Yeah. Dwan Davis.
Right, yeah.
More and more, I think he kind of poisoned the conversation, introducing a lot of bad ideas that people just kind of took and have run with. And so a lot of the work is just cleaning up kind of the fact that he really created a lot of myths around Washington state laws and public banking that people just glommed to at the time, and that have just existed through habit in our political culture. The work group is made up of people in government agencies, some legislators, but the head of it is going to be the head of our DFI, and they do get to pick three experts, at least three experts in banking, specifically public banking, to be involved into the group. So our next thing is trying to make sure that the produce experts that we think will be seriously investigate the project and direct it in a way that we will make it help get off the ground, rather than throwing out a bunch of these ideas that just kind of confuse and obfuscate the issue.
So Marco, let's you and me talk about that in specifics, okay? Later on, I'd appreciate that, because we've been down that road some together. Thanks a lot, guys. It's 1:30 already, or it's 90 minutes. Any more burning shares? While you're thinking about whether or not you have a burning share, I just want to remind you that we're really excited about this $25,000 matching grant. We're going to notify you midway during the week about how you can participate with that and serve our needed growth. And then also to put on your calendar to hold the date, third week in October 21 through 25, for a national conference. And Kibria, you have a burning share.
I do. I want to say thank you to all of the people who give to us every month. Many of the people in this room have quite a substantial gift that they give us every month, and we could not do this without you. We really could not. I mean, the board and advisors are all volunteers. This helps Michael and I make sure that things get done. So thank you so much to all of you who already donate.
Perfect way to end. Thank you very much, guys. Great to see you. We'll be here next month too, and stay in touch. We're always around. Okay.
Save the chat.
Bye-bye. Save the chat. Save the chat.